we move on to the big conversation around crude oil. The question really is that where do we go from here? Let's find out and get in an expert opinion. We have Peter McGuire of XM Australia joining us on the show. Peter, good morning and thank you so much for taking the time out. Well, let's just start off with your assessment of demand and supply with respect to crude and the kind of implications on prices.
Well, good morning, Agam. Greetings from Sydney. You know, when we saw what overnight was quite a dramatic move, two months we haven't seen anything like that, down nearly 4.1% for WTI, really crushed as far as price. And that really took everyone by surprise, considering you had that geopolitical consideration with Hamas, Hezbollah, we've had, you know, the leaders killed in these Israeli strikes. That seems to have dissipated and there's no geopolitical, I feel, premium built into price. And you saw the Saudis cut their price into Asia. So, yeah, obviously at the moment you'd have to say it's looking a little bit soft, but that can change anytime soon with geopolitical, Agam.
Right. So what are the factors at the moment that could perhaps lead even more weakness in crude prices?
Well, weakness would be if nothing eventuates as far as geopolitical tensions, that will wash out price. And you'd probably have a more softness to the downside. So there's the first part. The second part is if you don't see any constructive mechanism as far as OPEC and how they deal with these prices, whether they just say, well, look, we're quite happy to take a $70 or a $65 handle, or do you see just a continuation as far as softness across that whole sector? That would be to the downside, but there's equally an argument for the upside as well.
And what would that argument for the upside be, Peter?
Okay, geopolitical concerns really get out of line. You've got the Houthi rebel situation, Agam, that creates mayhem across the Gulf of Aden, leading into the Red Sea. The Suez Canal becomes a choke point. Shipping needs to go around the Cape of around Africa. That would really increase inflation costs globally because of the shipping of goods, how much it extra cost. Then you've got other concerns as far as war premiums built into price, and that really escalates to the upside. So, you know, it depends on how this whole situation is created. And then naturally, as we saw earlier in October, it really adds, you know, $4 or $5 or even up to $10 of war premium very quickly.
Right. Peter, I'd reckon that OPEC and non-OPEC production would largely move in tandem. Is there a big difference between the two, and could there be a divergence? And if there is a divergence, could there be a big difference in price as well?
Well, there could be a divergence as far as OPEC Plus and the broader market. So remembering what America produces and other big producers. So, yes, their argument is, yes, there would be, I feel, some form of divergence. Secondly, we've just got to work through that to see I think the mechanisms behind the consideration, where does price take us? We can speculate all day and draw up scenario plans and, you know, create a business case for what happens, but let's just see if it does materialize, because you're talking about major supply shocks that could enter the market as far as, you know, geopolitical concerns.
Right, Peter, we'll leave it at that. Thank you so much for taking the time out this morning and talking to us about what we can, in fact, expect from crude. We'll continue to keep an eye on that one.